Hello and welcome to the second part of the episode 17 of the London Report. Hi, this is Imi from iTradeAIMS.net, AIMS Stress-Free Trading. What you see on the screen is on the left you have the Slack window. This is our trading room, so I'd like to give you a little tour of this and then a quick view of what you see once you join the membership area. So inside, Mr. Ghost has got the premium account, so you get premium support, license files and everything, and all the other lessons are in tabs. This is one of the most famous and most beautiful webinar. People really love it. This is all the way from 2011. You can access this for free. If you go and click on the link in the description, iTradeAIMS.net, and download that book, you'll be added to our list, and we will send you a list in due course. Not a list, sorry, a link how to join and get free access to this. Anyway, so what I'm going to do now in the second part, like I promised before, was to go through what we traded and how we traded the DAX at the London Open. Please make sure you like the video and subscribe to the channel. If you're new to the channel, welcome. You will find all sorts of trading ideas. Well, not all sorts of, but particular trading setups that we trade. And on this channel, we don't talk about several different setups, and I only talk about setup 1, setup 2, and hunt signals, which is I can call it my own system, AIMS Stress-Free Trading. So you are welcome to join us, test it out. Right, so I'm going to use both of these windows. On the left, this is where I logged into the chat session. I said I have a short, which means, so the first thing I go about is I have a short, the test entry, just in case it explodes. And I was talking about this entry. Actually, not that entry. I was talking about this. So what I see is I see 1, 2, 3, 4, 5. Let's just do the count. See on the Elliott wave format, you would do the count like so, but the 10-second Elliott wave is simply look at the candles to the left from this point onwards, look 100 candles to the left and see which peak of AO is the biggest and which side of the AO of the zero line is the AO. So if it's red, that's your bearish 3, and that's your bullish 3. Now the bullish 3 was not followed by a 5 up. This bearish 3 has a 4th wave, so this is the minimum requirement of wave 4. As AO crosses the zero line, it becomes a wave 4. So I'm looking for a wave 5 down. So I had my entry here. Let's go a little bit forward. What happens, what I meant by it. So this is where I had my test entry, and now I'll be looking for London Open to see what happens. So let me go to the chat now, see what I was talking about around that time. That short was taken out by the up move. So what does that mean? Let's go. So around this time, I'm hoping that if the London Open strikes in, because you know it's what we call CIP, chaos influx point, new incoming information hits the market and things change, right? So but I positioned myself early. So this was a test entry, which means it was probably quarter or half of my regular R, which is 1 unit of risk. So let's suppose if you risk 1%, here you would risk 0.25%, and looking forward to adding on that if the market continues to go down at London Open. So let's go forward a bit and see what happens. So this would be my London Open. Let me draw a line at the London Open. So that would be the London Open here. I'm going to move it then to the open price, which is important to me. This price starts to go down and go up, and that's my London Open. So this is that comment I said. So because my entry was here, I had my stop loss there. Price went up just 2 minutes before the London Open, kicked me out. A minute before the London Open, it did what I like to call the ABC, right? So I thought this is A, this is B, this is C. Let me delete this and let me bring that what I mean by it. I thought this is A, this is B, and this is C. And B's can actually sometimes poke the high of previous 3 and still be B. And this kind of gave me an idea that market could go further down. So I was interested in a short. Let's go forward. That's my London Open. So London Opens here. I'm going to move this to this. So that's the price level now. If the price stays below this this price, let's bring it here, then I would consider it immediately as downtrend of the session. If it goes above that open price for that session, for that 15-20 minutes, I would consider that as an uptrend. But as an overall, I will look at the count, which is 1, 2, 3, 4, 5, and see where it goes. As we carry on, let's head over to the chat section, what I'm talking about. So on the second minute, I'm saying now we are in mild downtrend on M1. So it wasn't actually mild, it was poo below box. That wasn't poo, it was meant to be PO below box. So it was here. I wanted a pending order below that for a blast into 3 down. Now I know it's going to be a 5 down. We can see it's 5, but I'm hoping and expecting that this would become a 3 down, because if the idea is correct and the market is hit with strong new information, then this price could move so much that the new peak that will be formed will go lower than this one, creating this as a new wave 3. Then correct myself here, I'd say rather 5 rather, and I think the 888 was holding. So let's go to the next minute or two. So as the market comes here, as you can see, my pending order here was taken, and here I would, so once I do this, I will show you the pictures of the trades that we have taken meanwhile as well. And okay, so as you can see, now the market goes strongly down. Nothing to worry about now. Just have fun, trail the candles. And this has moved so fast that there's a high probability now that this will become a new wave 3. I quickly take stop loss to break even on the 4th minute. Around here, now stop loss is that break even. TC activated, which means that I'm trailing the candle highs now. And around 10 minutes into the London Open, which is let's say this, I have taken my profits and my trade number 1 is done and dusted. Now if I didn't exit here, I would have given all my profits back, and we don't want to do that. So I'm going to bring those charts now. So this is that London Open. This is where that box entry was, and this is an interesting thing that I forgot about earlier on the trading view, is that when the market went up around here, let me go back to the trading view platform, that's that candle over here, I think so, yes. So here is what I did is that I saw this as an apple, as an ABC up, so I made my early entry there and another entry here. Now the trading view chart is a little bit different, but obviously we trade the MT4 chart. So it comes here, I take my first trade there, and then I do my add-on here. Then what happens next is that it's going, so then I'm moving my stop loss to trail the candles, and then next, so now both the stop loss are trailing the candles and it's going down. In the next chart you will see how beautiful the M5 chart is, and as you can see, the M5 has a strong impulse down, followed by, I'm looking at the chart to the left, right? A, so this A up, B down, and C up. This pattern, this is the PC pattern, where the wave C fakes out the previous in a sequence of stepping down. So this is lower lows and lower high. It would break the lower high, but it wouldn't break it successfully. Instead, it would actually be a fake out and then drops, and that's what it was. So because I look at chart like so, the M5 and M1, I can see both the patterns at the same time on both the time frames, which is an exciting way of trading. So that allowed me to take a trade based on this. As you can see clearly, it was a fake out of this, and this fake out meant it was a directional indication candle, which told me that the bears were winning the game on this time frame. So I took an entry, stop loss was up there, and then that was joined. That was yeah, the entry. There was another entry made because this was obviously the trading range low, and if price was to go below this, then it was going to go further down, and we talk about that in the chat room as well. Okay, so let's move on and see what happened next. So looks like market was hit by some levels over here, and strong buyers entered the market, and I know exactly what it was. So let's just go to the hourly chart and let me show you what happened. So here, can you see here now? This is what it was. Market came down below this, created a PC. So this is a strong uptrend that is going on. Market came down, was met by buyers at these levels, above these levels. So more buyers kicked in and price went up. Let's go back to the M1. So now we are not looking for any trade around this time. We're just seeing what the market does. Just waiting and waiting, waiting. Around here, you're probably thinking, oh, I could have been short. Now this is a big box, so you don't want to trade this because the box is too big. It goes forward, hits this level again, giving you strong indication that this market does not want to go down further now. So around here, I would be looking at other things, chatting with people. Let me see what time it is, 8:26. As you can see, we are already having a chat, and this is where interesting stuff will happen when DAX might do a long hunt. So I'm going to skip to that time, and I'm going to quickly do one by one so you can see what happened. As you can see, the market's going up around this time. So up to here, I wasn't interested. I would have an alert here, and as soon as price goes above these levels, it will draw my attention back to the chart to see what's going on. So this means that market is going up. Now price is above the gator, above the purple. I'm only looking for longs, right? Aha, so this is where it was. Let's go back a bit. As you can see, so Jasmine looks at this chart, and rightfully she sees a market that is breaking out and then taking a pause. This really was a spot where you would be looking for a hunt signal. Unfortunately, hunt was not created, not on this chart at least, because there's no dark candle. But if there was a dark bar on the AO here, and then this one was an inside candle, this would have been an easy, lovely trade. Let's see what I say to it. I look at 8:37, just one more minute would have been good. So what I'm saying here is that, damn it, if it just stayed a minute sideways, then this AO would have turned dark, and that would then allow the hunt signals to create a signal. And I will show you what I meant by it in the next slide. But before that, I will show you the entries that I made earlier. So the entry is based on ABC zigzag. It is an apple. That's the first one over here. And B is the entry based on setup 1 into wave 5. So that was the second one, and I took my exit here. Around this time, it felt like I exited early, but I was content with, I followed my plan. I exited a few points above, but this would have taken the trailing stop loss anyway. So here it is. That's what I was talking about. This is that Waltz pattern here. And then it was followed by a seed. So I had my pending order, but market went down, and as the price breaks below the low of seed and closes below, then the seed entry pending order was cancelled. But surprise, surprise, price comes down, creates a beautiful PC cherry. If you remember a few minutes earlier, I talked about a PC pattern on the M5 chart where the market goes below the sequence of stepping up. It's a fake out, plus it's a directional indication candle. It tells you that markets have been met by buy orders and it's going up. So I immediately put a pending order. This is a cherry signal. This is the hunt cherry. This, you get to trade this in the stage 2 of your training process. So if you become a premium member, you go through stage 1, and as you enter stage 2, you will learn how to trade the cherries. But before that, you'll be trading only the setup 1 in stage 1, just to say. So that was a beautiful entry, and now I had an interesting comment about this. So let's go there. Just 1 minute would have been, yes. 35 was so ready for it. Let me go back to the chart. That was the 35 I'm talking about. And I said, but there is money pouring into these indices, billions. Billions and trillions are coming in. People keep buying. I talk about the Waltz seat, which is this one. And then sadly levels to the left, because there's a level on the hourly chart. Boxes to the left. So it kind of brought price down. But as you know, it did it for a beautiful purpose. As you can see here, it was for this cherry. We went up. When price comes there, stop loss was at break even. Let's go there. That's the time, 8:43. Let's go to 8:43. Here we are. Looks like those who took the risk of buying at the bottom are definitely dancing. I'm talking about the daily charts. You know, when the pandemic spikes went down, a lot of people actually bought at the bottom. I wasn't one of them, and I'm still proud of it. You don't want to buy falling knives. I still do the same. If you take me back there. Okay, so I look at this cherry, and let me bring that. That's the same chart that you saw here. So I look at this cherry and I say, I will die if I don't take these. So this is one of my setups. The PC cherry is one of my most favorite entries, especially with this clear cut 1, 2, and 3 going on, right? A proper trend up. And then within that, when it does a PC and it does it above, you know, when it breaks the range and then comes back to it, retest that range, and then it gives me this, I definitely take it. I will die but miss this. You know, you have to kill me in order to stop me from taking this. Even paying a rent gives me more pleasure than missing it, I say, which meant that even if it becomes a losing trade, it still gives me more pleasure than missing taking this trade, because this is the setup. This is that setup that we want to take, and that's the most important thing. Right, what's next then? Let's go. Okay, Perfectamundo cherry 30p target point hit 2R. So that hit because this was a 15-point stop loss, and a 30 target point was hit over there. Let me show you next. So as you can see, this trade, when the price hit those levels and 1R stop loss was brought to break even, and then candle trail, as you can see, had already begun. What happened next is that the market goes and hits my target point, and I'm out. So that's another beautiful trade, but we are not done yet. So let's go forward. Now we are looking for this gator to sleep. As the price goes down, the gator would sleep. Air would come down to the 0 line, and then we will take a trade, but there will be some interesting chat. around there. Jasmine will look at the chart and she would find a setup 1. Since DAX is in H1 box, will you filter this S1 now? Interesting comment. And that happens around a few minutes later. So let's go there. As you can see, price is going down, AO is going down to the 0 line. And now it's not really crossed, but it's very close. And this brings interesting thought, because she's looking at this and she's asking about the setup 1. My response to that was that it's still too early. I want my AO to cross the 0 line, and I want Gator to sleep tightly in a tighter box. Just a few minutes later, I'm interested. Here I say need a fresh cross, tighter box. Check that price has not created consolidation. Most people get this wrong. I was talking about this. As you can see, I'll bring my arrow. You can see that the market has not created a consolidation. It's actually just come straight down. What I want it to do is to go up and down and up again like this to create a consolidation box around that area. So as soon as I see that, which is happening right now, Gator is sleeping, AO has crossed the 0 line. Now I am interested. This is what we want, but slightly more tighter. So let's see what happens next. So as the price is about to go up, crossing the box, I'm getting interested in this. Again, now I would make an entry here at the close of this. I would definitely make an entry. Okay, so here now we are interested, and pending order above there would be all right, even if it looks like a B trap. It is a setup 1 as the market goes up. So here I'd like to show you my charts that I posted over there. I think it's this one. Yeah, let's go. I don't know if you can see it. Yes. So this is the earlier entry. These were the 2 entries before, and that's that entry now. So instead of taking this level here, let's see. Instead of taking this, oh, not this one. Instead of taking this level, I opted for that level because that's the outer level, and then had the target point up there. Okay. Let's go back to the chart. Cancel that. So we take these trades and we simply just follow the chart, what it does. I'll show you my chart again. So we took this trade here. This is the break-even level, and that's the target we're looking for. So that would be a 3R target. But if price bounces against around these levels, then we would happily take profits. Next slide. Market is now near the break-even, and this would automatically be triggered by this button, and stop loss would be brought to break-even here. Next slide. As you can see, stop loss was brought automatically by Snom's Advanced Trade Manager to break even at 1R. All we have to do now is trail candles or just wait for it to hit target zone. So we play every trade differently. So here's a bit of mental support. You know, I talk about the psychological side of trading. When you're in a trade and your thoughts go, will I win this? How much am I losing? Will it help me recover my previous losses? Oh, I better take this profit to finish BE today. That means you're not in the zone. And if you're not in the zone, you're not going to be objective. So you will make mistakes. It is a beautiful game. As long as your emotions are in check, you're not too scared or, you know, or stuff like that. Okay, so what happens next is that around this time, my stop loss happened to be just below cherry. So there's a cherry entry that comes over here. PO60 will delete if first entry exits. I'm just being greedy. If you think about it, it gave me my 13 points that I'm after. That's what I'm talking about. So let's go to that chart again. Okay. Right, so now I understand this. This is the first entry, obviously, and the stop loss is the break even. This new entry is actually based on this cherry. So my stop loss happened to be below the cherry, which means that it looks, you know, my stop loss of my previous entry is just below where the stop loss of this cherry would be. So that means I have a free trade, so I can take another trade and, you know, risk my usual risk. I've already have a free trade, so if it goes both in my favor, it's going to be a double trade. So she asked, so no cherry for you? At that time there was no, but then I looked at it and I found value in it and I quickly took the trade. Cherry is in and cherry is BE. That was very quick, as you can see in the next slide. It happened, quickly turned into BE here, and this was almost 2R. So when price started coming down, I exited immediately. So took trade on this. This is pretty good exit at this point when you look at it, but as we look at the next chart, it probably won't look as good because price continued to go up. And that's what it is. You have to go for your trading plan and what you are doing, something that you can do consistently again and again. That is all what matters. So as long as you keep hitting 2R targets on your setups, just keep doing it. Okay, that's the Swizzy trade that we talked about in, I think, in part 1 of this London Report episode 17. And as you can see now, the DAX, so we had a pretty good day. I took a trade here and here, exited here. That's the first one. I tried to take this, but it wasn't triggered. Then took this beautiful PC cherry. I love these cherries. Hit 2R, and then took a setup 1 here, or a setup 2 with a breakout at this level, and then took another cherry. See, it could have been taken as well, and exited here. If I had just been patient enough, what would have happened is that my cherry would have been break even, but this would have hit the 3R target. So kind of the same result, and that is it. Now the market still continued to go, and one could have traded a lot more of it. Let's just play this to complete it. As you can see, that this is where I exited, and it just kept going on further on. I'm going to play it quickly for you. It went on and on and on and on and on, and then it created a few more setups. So it was not a bad day for trading. But as soon as I hit those targets over here, one campaign, second campaign, third campaign, that's enough. You don't have to overtrade. You don't, because your emotional energy depletes. You get tired. Your focus is not there. But at the same time, also, as you have seen in part 1 of this video, and if you haven't watched that one, link is in the description. Go to part 1 and see that we were also trading the Forex pairs in the background as well. So both things go side by side. You don't have to do both of them to begin with. You can either start with Forex, or you can start with German 30 or FTSE, or if you're in the US, then trade the US 30 at the New York Open and build from there. I hope you like this video and you found value in this, and this is how we trade in our trading room every day. I highly recommend that you join us in the AIMS live trading room. You're definitely going to love it. We're going to trade every day. Not just this, but we have the hourly charts, the 15-minute chart, the daily charts. You know, all these ideas are being there. And also make sure you follow me on TradingView, because that's where I will be giving you some free signals with analysis that you could trade. So hit the like button and subscribe to the channel if you haven't already. And thank you very much for spending all this time with me.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos. See you next time.